Hello there, and welcome to our program today. It's a pleasure to come before you and help you to understand a little bit about investing in commercial real estate. Um, as many of you know, for the last 26 years, I've published the official magazines that are relocation and branding and distributed by the First Multiple Listing Service of Atlanta. Their website is atlantacommunityprofiles.com, and I published 5 magazines about Atlanta. One is for the North Fulton area that's in partnership with the North Fulton Chamber of Commerce. One is in partnership with the Gwinnett Chamber, published in Gwinnett County. I published another one in partnership with the Cobb Association of Realtors for Cobb County, one for Atlanta, one for Inside 285. And the focus of these magazines for the last 26 years has been residential in real estate, but we are shifting the focus a little to commercial. And the next issues will all have information on commercial real estate. And I'm also a commercial realtor with KW Commercial, and I've been investing in real estate probably from a commercial investment standpoint, since 1989. I owned apartments and single-family residences as investments, and I've watched their growth over the years, which has been extremely profitable. And today I'm trying to help you to understand some of the tools that we use for investing in real estate. And to that end, we have 2 representatives on the show today from CoStar, which is probably the premier research company for commercial real estate tools, evaluation tools, let's put it that way. In America, we have Michael Poole. Hello, Michael. Welcome to the show.
Good afternoon, Lou. It's a pleasure to be here. Thank you.
Michael is an account executive in the marketing department of CoStar. And Trent Turner. Hello, Trent. Welcome to the show.
Hi, thanks, Lou. Thanks for having us.
Trent is the market research analyst, and my nickname for him is Head Guru, really, for the Atlanta area. He has been on the show before. And by the way, if you'd like to hear that show, it's on my website, atlantacommunityprofiles.com. And by the way, my website for my real estate is just wieland.com. And guys, it's a great pleasure to have you on the show. And you have been very helpful for 2 agents throughout at Keller Williams, at KW Commercial, and many others, of course, in Atlanta. But wondered if you might just take a minute and give people a brief macro kind of overview of the capabilities of CoStar.
Sure, I'll take that one. Thank you, Lou, again for having us on here. CoStar Group, we are the #1 source for commercial real estate information, marketing analytics across the country and globally now. We are a research-based model, and we service, if you have any sort of interest in commercial real estate, we can help. We can service your needs, whether you're a developer, broker, owner, you name it. But yeah, of course, we definitely brokerage community, as you mentioned, Lou, is definitely our #1 client base and #1 source that we service across the country. So yeah, again, thanks for having us.
So we are kind of in a big shift in our economy, and not just real estate, but in every area. But how has the shift affected real estate, commercial real estate? If you could articulate that briefly. I know you could go on for about 3 days, but how would you briefly articulate that shift and how it affects investors and home buyers and sellers of commercial real estate, particularly multifamily and land?
Yeah, I'll take that one real quick. So, really, we're living in unprecedented times. Something like this has never happened before. And as the data comes in, we're starting to see more and more how it's real time affecting people in their day-to-day lives. So, commercial real estate overall is more capital intensive. So the data that comes in takes a while for it to flesh out and for us to see the full impact of what's happening. So certain asset types, so including multifamily, are more responsive to the coronavirus. So example would be rents. Rents, you see rents get hit first before multifamily rents before most other rents and other property types. So for multifamily, it's a little more fast moving, and we're starting to see a clearer picture with multifamily.
So do you tell me? Do you have your crystal ball in one of those desk drawers there, and tell us a little bit about what to look for? If you could pull that out and just take a look in and see where we headed here, and relative to where we've been. Let's put it that way, maybe.
Yeah, absolutely. So every day we're updating our forecast. So research is still coming in and updating all the data. So we're getting forecasts in from our third-party economics provider, Oxford Economics. And what we do is we rerun it through our forecast. We take in historical data, we take in the economic data, break it by industry, and feed it into our forecast. So our forecasts are constantly being updated. Looking into the crystal ball, the immediate picture is not very bright. Obviously, it's pretty bleak. We'll see sizable rent losses in multifamily. We will see a significant slowdown in demand. And that doesn't pair well with a lot of supply coming online in Atlanta. So we're going to really see rents and that demand get hit first. But we forecast out a pretty strong, robust recovery. The good thing about Atlanta is it's a very diversified economy. We have a very strong base of office using jobs, which drives a lot of Class A multifamily demand. So because we have historically had strong job growth and we have a strong demand drivers, in my opinion, I think Atlanta multifamily will fare better than other Sunbelt metros.
Well, I know you had some pretty fancy charts in a presentation that you did recently, and how much better, or how would you quantify, to some degree at least, from a macro standpoint, how much better we're doing than some of the other major markets?
Right. So we have analysts across the country for all of our 390 markets. And sometimes we'll get into little tussles about which one's doing better than the other. But when you really compare Atlanta to the rest of the Sunbelt metros, we have, like I said before, a very diverse employment base of those education and office using jobs. So, for example, South Florida, New Orleans, and Las Vegas have a high amount of these leisure and hospitality jobs, as well as retail jobs. So they depend largely on that leisure and hospitality industry. And because of that, they've been hit the hardest. There's been you can expect more unemployment in those metros than you probably would in Atlanta, because we have more of a diversified economy. So right now, the future outlook for Atlanta is more positive than other metros. We'll still get hit pretty hard. We still have a very strong tourism industry. We're one of the top 10 most visited cities in the United States. So we're going to be hit hard to a degree, but because we are very, very diversified in terms of our economy and our employment base, we should still fare better than those other tourist-centric markets.
So the value of CoStar extends to not just the buyers, but also to sellers of commercial real estate. And Michael, that might be in your bailiwick. What tools, could you explain to people how people in my line of work, commercial realtors, use CoStar to market properties to buyers and also provide information to sellers?
Sure. Yeah. Thanks, Lou. CoStar purchased LoopNet, which was one of our top acquisitions back. Gosh, it's been 7 years now since we've acquired them. And LoopNet is the marketing arm of CoStar. CoStar Group also provides free marketing on the information side of the coin, right? The CoStar Group website. However, since our acquisition of LoopNet, we provided a much deeper, more expansive scope to our client base by allowing clients to market their listings on LoopNet, which receives roughly on average 12.6 million views per month. So if you are a seller, especially in today's market, as Trenton highlighted, you know, there's a need now more than ever to have your listing online, especially with COVID-19 and the limited amount of tours that are happening. Having an online presence is absolutely critical, especially in today's market. So, you know, we can help get your listing out on a national level, national scope to the nation's buyers, because they're searching. We have the data to prove that they are searching even today. We can let you know who's searching as well, but that's a story for another day. But yeah, we're definitely helping sellers move their product across the country.
LoopNet is kind of a marketing platform for sellers, and CoStar, and it's viewed, let's put it this way, by consumers, whereas CoStar, is more of a professional tool, right? More of us for us in a real estate business professionally. Can you distinguish between the two? How CoStar is used by the realtors themselves primarily?
Absolutely. Yeah, there are distinct differences between the two platforms. CoStar Group is the information side of the coin. So your commercial real estate professionals, brokers, owners, investors, things that folks of that nature will be searching on CoStar for information to help give them the most transparency that they can find online when it comes to data, information, analytics on commercial properties and assets. And LoopNet, as you mentioned, Lou, is the consumer tool, right? So it's free to search on LoopNet, and we have data that proves the point that tenants are searching online first in commercial, very similar to the residential market, right? So when you're looking to buy a home, you go online, and same with commercial tenants and buyers as well. So again, LoopNet is the consumer tool where the end user uses that for free to search. Well, CoStar Group is a subscription-based model for commercial real estate professionals that they use for research and information.
Of determining value in real estate would be inventory, the forecast for price increases, areas of the country that might, or the city in this case, that might have the best potential for growth. Trent, what are some of the criteria that you use to help determine value that's available through CoStar?
Yeah, absolutely. So what we do here in terms of the investment scene, capital markets, we really expanded on that, first of all. And with that, with expansion of really gathering as much data as we can, we've been able to use a forecast for pricing for all property types, including multifamily as well. And what we call that our market pricing. So you have two sides of the coin. You have the actual pricing, so what properties are actually selling for on a per unit basis. And then we take that data and we put it into a market price. So it puts in a forecast, the same store series. We're able to compare and see how those prices are trending in multifamily, but in other property types as well, and then forecast it out.
So right now, like for example, in residential, right now we have a 2-month supply generally. Is there a yardstick similar to that with commercial multifamily, or how do we compare the two criteria? Is there a valid way? Inventory, is that a valid criteria or not?
Nothing I can think of. Usually, if it's usually what we'll do is we'll look at maybe vacant units if you're trying to reach a vacancy, but for selling homes, usually you have what's on the market, and then you have that inventory of what's on the market. For multifamily, it's a little bit different.
So what would you say is how would you prioritize the criteria in evaluating commercial multifamily?
Yeah, absolutely. So really, when you're looking at multifamily, I'm usually looking at it from a 30,000 foot view, but when you're looking at multifamily, you want to see, first of all, what absorption is. You want to see what that demand, how strong that demand is in that particular area. And then next, you want to see the supply that's coming online, and if that demand is outpacing that supply, that's going to be key. So, for example, in some submarkets in Atlanta we're seeing more supply than they are demand. So Buckhead, Midtown has seen much more supply than demand recently, and that's a lot. Those vacancies have really skyrocketed recently, and because of that onslaught of supply outpacing demand, you'll see that rent growth start to fall as landlords have to compete for a smaller pool of prospective renters.
So tell us, maybe you could help investors and sellers understand why it's important to make sure their realtor has access to CoStar.
Well, I'll take that one, Lou. And CoStar provides the most transparency in commercial real estate you can find online. I mean, if you are a seller, right, you need to make sure that your broker is equipped with the tools to help them find almost complete inventory in the market in which they're searching, right? So, CoStar has, we'll never claim to have 100% of the inventory, but CoStar has, close to it as far as every property that exists in a marketplace based on our research model, right? So, to talk a little bit about that, CoStar, just second to the Census Bureau, has the largest research organization in the country, where we employ just south of 2,000 researchers that are combing the marketplace. They're making phone calls, they're handling interviews, making sure that we collect and update and verify information. And we do that on a 30-day cycle, right, for most pieces of the information. So all that being said, it's definitely the most robust data that you're going to find. So for a seller to have that peace of mind that their broker has every tool possible in the toolbox to help move their property is so essential today.
Now, Trent, the other day, you did a program for all the real estate agents who subscribe, and I think you talked about a least case scenario, a best case scenario, and a worst case scenario. So for multifamily, over the next 3 years, how would you address those three potentials or three scenarios?
Yeah, absolutely. So in CoStar, we have multiple scenarios that you can choose from based upon maybe your line of thinking or what could be happening right then. You may think it might be a worst case scenario. So what we use is in line with our third-party economics provider, Oxford. It's called the baseline. And so for the baseline, what they do is they bring in economic data, and then we marry that economic data with the whole database of CoStar data. So for multifamily, for Metro Atlanta's baseline, currently, we will see a definite rise in vacancies. We will see pretty sizable rent losses. However, at least in terms of vacancy, that vacancy won't go too far above that historical average. So we have a very long history in CoStar for Atlanta's multifamily sector. And because of that, we have very accurate data for multifamily for Metro Atlanta. And that vacancy should not rise too far above that historical average. And then in the outer years of the forecast, probably 2022, 2023, we will see vacancy start to trend back below that historical average as the economy starts to really recover. And that's our baseline. So that puts in a more robust recovery. So near term hit to multifamily, and then a robust recovery in the latter half of this year and the beginning of next year. Now we have a severe downside scenario. So that's usually used for bank stress testing. That is a very, very bearish look at the market. So for severe downside for Metro Atlanta's multifamily, we will see significant losses, significant rises in vacancy well above that historical average, and sizable rent losses. And because the severe downside does not put into a robust recovery, those losses are sustained over the rest of this year and throughout 2021. So that's a more, if you are more pessimistic about the coronavirus pandemic and how it's affecting the economy, you can use that scenario that will automatically put that in.
Quickly, how would you just portray the land as an investment property type going forward over the next 2 or 3 years as a result of our economic shift here?
Right. So land definitely is more unpredictable and very varied by where you are, what's already on the land. Obviously, people might want, if they have enough cash, they might want to go in and buy some land and hold on to it, particularly in fast-growing areas of the metro, including north part of the metro or in town. But it's very difficult to look at and see what, in the crystal ball and seeing what people are going to do in the future. This land can be very so varied by where in the metro you're looking to invest or build upon.
So it's kind of not easily as forecastable, maybe you might say, as other property types. Is that a pretty fair statement?
Yes. That's why we don't yet have a analytics tab just for land. You are still able to pull it yourself and look at the land comps and compare it and aggregate the data, but we don't have written narratives on it just yet because it's more of a complicated property type. But we're working on it.
Thank you guys very much for being on the show, and we appreciate all the work that you do and the assistance that you provide. And Trent Turner and Michael Poole, two guys who have been very helpful to me and to everybody that I know in commercial real estate. Thank you for listening, and have a nice day.